Hello and good morning. If you've been to one of our webinars before, we would like to welcome you back. If this is your first time, we're delighted to host you. So we would like to welcome you today to the webinar. We are super excited to kind of tell you more about how we can support you in terms of managing your cash flow. Before we begin, please allow me to tell you a little bit more about Bayzat. We are a work-life platform that benefits everybody. Our predominant focus is to make life easier and work better for you. So we automate HR solutions in terms of payroll, in terms of employee benefits, as well as offer insurance propositions. To tell you a little bit about us, we work with over 1,000 corporate customers, and we're currently working with 30,000 lives in the UAE. And we're delighted to have 200 plus members across 3 different offices globally. Before we begin, please allow me to tell you a little bit more about who the guest speakers are. So we have Arijit. He is the product specialist at Bayzat. He's a senior product manager that basically comes up with awesome solutions for our customers, especially on the financial side. So you will see some of the great work he's been doing over the last few weeks. I'm delighted to welcome Baha. He's our VP of Finance and also ensures that we all get paid on time, and also manages on a strategic level with our executive team how our company is operating through these unprecedented times. I'm Elena. I'm the host for the day. So I work at Bayzat and been with the company for over 4 years, managing strategic partnerships with our insurers as well as our key clients. Before I hand over to the gentleman, I'd just like to go through the agenda for the day. So number one, we're going to look at the cash flow in terms of the current and the future. We understand that all companies have pretty much have changed the way that they're operating. The team has done a fantastic job putting together a tool, which I have emailed to everybody, and they will share the password in this session. And then we will have a Q&A forum. But I do encourage you that throughout the presentation, you put any questions either in the chat or in the Q&A section, and the team will be able to answer them for you. So without further ado, I'm going to hand over to the team to take you through the presentation.
Thanks, Milena. A very good morning to everybody participating. So a few weeks back, we ran a webinar around business continuity plan and also how to plan your finances, company finances accordingly. Based on the feedback of that webinar and also some interviews that we conducted over the past 2 weeks, we realized that due to the unprecedented time that we are in, many of these companies are facing financial challenges, of course, and we started brainstorming around how to leverage the existing data on Bayzat benefits. We can solve their cash flow problems, at least try to solve it as much as possible. So by leveraging on the existing data, we mean employee information that is already available on our platform, or anything related to health insurance, and how can we compile all those data and present it in a model for everybody's use, where they can of course fill in it with their individual company details and then use it as per their need. So that was the intent behind this particular tool that we have created and we are going to present about. So yeah, I mean, I think from now on, Baha will take care of it, and all of you, Baha.
Baha, we can't hear you and we can't see you.
Yeah, sorry about that. I hope it's better now. Can you hear me?
Yes, we can hear you.
Yeah. Okay, great. So So thank you for joining, everyone. This is actually our second webinar on financial planning. The first one we had a month ago where we talked about business continuity planning, and we touched on financial planning as well. During our first webinar on financial planning, we stressed the point on building cash flow forecasts, their importance at this point of time for every single business. We talked about how important it is to have a tool in order to have continuous visibility into cash flow and working capital. And we actually took the initiative after the discussions that happened after that webinar to build a tool for our customers to be able to use it to forecast their cash flow. So before we jump and start talking about the tool, I would like to just touch a little bit on what is important at this point before we start modeling or before we start forecasting our cash flow. There are a few steps that need to be followed. So the first one is to start understanding our current cash position. So without understanding the current situation, it will be very challenging for any business to be able to forecast their future. The second one is identifying cash flow levers. By this, I mean where the cash is generated and how it's spent. And it's different from business to another based on the business model. And the third step is to actually do the projections and come up with the projections of the cash flow. So to better understand our current cash position, it's very important to make sure that all financial transactions are captured, recorded in the accounting systems on time. There are no delays in recording these transactions. The financially closing cycle is not lagging. Optimally, any business should be able to close within 10 days in the following month. So that's very important to understand. If any decision making need to happen, can happen fast based on the information. And finally, it's very important also to analyze accounts receivable and accounts payable cycles against each other. By this, I mean looking at, first of all, do they mirror each other? Is one cycle is longer than the other one because of loose credit policy, or because our suppliers are not extending enough credit to us? So comparing the AR cycle with the AP cycle is also very important to understand our current cash position. For identifying the cash flow levers, as I mentioned, we need to understand the sources and the uses of the funds that we have. And the best way to do this is to look at our cash flow statement and look where we are generating most of the cash and where we're spending it. And this will dictate how we manage our cash. Also, comparing the timing of revenue and collections is very important as well, because if our revenue is recognized way ahead of it's collected, then we need to look again at our credit policy, at our current contract, and try to find ways to optimize that. Finally, again, AR and AP are also the main levers for most businesses, especially small businesses, in determining the cash flow levers. Once we have this analysis done, we understand the ins and outs of our cash, and we have a clear view on our current cash position, then we can start using a forecasting model or a tool to understand what's going to happen in the future months, how our cash will change based on the anticipated transactions in the future. And the best way for modeling is to prepare different scenarios, and each scenario should address specific risks or address specific situation that is anticipated. So most businesses prepare 3 to 5 scenarios based on the size of the business. And one of them should be the pessimistic scenario, which is the bad scenario, and should address the worst case. And there should be a base case scenario, which is business as usual, then the good case scenario. In this environment, I prefer to be more focusing on the bad case scenario and the best case rather than the best case scenario. So having a best case scenario is okay to look at, but when we're analyzing cash flow from a finance point of view, we need to optimize our cash flow measures for the worst case scenario, not the best. And it's very important to have the model updated on a monthly basis. If it's not updated, then it becomes obsolete and it won't be more meaningful to the business as time passes. So I will start talking about the financial planning. I will start going over it and explain it to you and how to use the financial planner to build a financial forecast for your business. But I want to highlight a few things about this tool that's built by Bezat team. So first of all, this tool helps build financial plans, forecasts, etc. So what the output is financial statements. It's the 3 statements: the income statement, balance sheet, and statement of cash flow. And it's built to address the recent financial measures like unpaid leaves, forced paid leaves, terminations, extension on invoices, and even extension to customers. So it's a pretty flexible and addresses most of the recent financial measures. Finally, it's built very granularly, which by this I mean it's not a high-level model. It depends on it could depend on transaction level. It addresses each cost individually, because from our experience in Bezat, we've realized that granular models are actually better in being more accurate and anticipating how much cash we will end up with each month. So we prefer this model, and it works better because it forces us to think about each single transaction, each single customer, employee. So it does not leave a room for interpretation or a room for a flexibility that could actually make us miss our cash flows forecasts. So right now I will go straight and share the password for the file that Malena shared with you. So it's Bezat 2020. Please let me know if you're facing any issues with opening the file. You can post in the chat. Okay. I think we'll wait for 1 to 2 minutes for everyone to open the file. It's I think it's 13 megabytes, so it might take some time to load. So once it's loading, then we'll start going over the file. Cool. Please let me know if we can start. So just type in the chat. Okay, so if we have enough number of participants who have already opened the file, then we can start the walkthrough.
Baha, somebody's saying that the password is not working.
It could be because Bezat is capital letter, the B, so try the small letter Bezat. Small. So please try Bezat with a small letter. Rohit asked where can I get access to the file. Actually, Milena sent it around 40 minutes ago by email.
Correct, but if you need me to send it again, just send me your email address and I'll re-forward it again. Okay, it seems people are able to open it now, so I think we can start.
Great. Okay, cool. Some participants are sending emails to receive the file, Milena. So please, can you send the file to them?
Yes, I will do it now.
Yeah, great. So we'll start anyway, just to make sure that we have enough time to cover and walk you through the file. So basically, the tool that we built has different calculators or different sheets that each one has a specific purpose. And each one covers like certain area in expenses or revenue or in assets or liabilities, basically. So the first let me actually go through the content for one time, then we'll dive deeper into each one. So the first one is the settings sheet, which is basically there are questions and there are kind of settings that need to be configured based on your business. So once you go through these questions, you'll answer all of them and you will fill all the required fields, then you will be set to start using the model. We'll talk about financial statement, pro forma financial statements and dashboard at the end, because this is the output of the financial model. Then we'll jump into revenue. So this is the sheet that we will use to calculate our monthly revenue and collections and discounts and cost of sales. So, and the second sheet is for operational expenses, basically all our purchases and our transactions with the vendors. It's the same, it provides the monthly expenses and it provides also monthly payments. So this is from the revenue expense side. And other than this, we have a bunch of sheets that calculate employee-related costs. So we have the salaries calculator, which calculates the monthly salary for each single employee. I have added a few examples here that we will use in this tutorial. And other than that, we also have a gratuity calculator, which calculates the gratuity of each employee based on the labor law, the UAE labor law. We have an end of service payment calculator, which basically captures the terminated employees and their dues that need to be paid at the end of their service. It allows us to organize the payments across different months based on different factors, either installments or deferring the payment to certain months based on our cash flow situation. We also added the unpaid leaves calculator. The unpaid leaves calculator calculates if we are putting some of our employees on unpaid leaves, then it calculates the savings that we realize from these unpaid leaves on the salary expense and payroll payable. We have also residency visa cost calculators. So based on the residency visa expiry date, we have generated, we have calculated the cost, the upcoming cost for each employee. So for example, if we have an employee who has up for renewal in June, then we have the calculation done in June for this employee. We have also have the health insurance calculator, basically. So it based on the insurance payment plan and the premium, it splits it across different employees, and it amortizes the cost across different months as well. So like you can, if an employee is terminated or leaving the company, then we'll see that their related costs are removed. It's definitely dependent on the insurance company's refund policy, but this is very generic. So we have a paid leaves calculator also. If we're putting some employees on forced paid leaves, then we know exactly how the paid leaves provision, the annual leaves provision, is changing over time, month to month. Finally, we have the loans calculator, which allows us to add all the current outstanding loans, credit cards, overdraft facilities, and calculate the monthly cost of paying back our debt, and what happens if the bank allows us to skip a few payments. So we'll start talking in details about all of this, but the starting point is populating this sheet, which is employee list. So employee list contains data that if you're a user of Bezat benefits, you can easily access this data, which includes the names of the employees, the department, hire date, probation date, and all related information. So once you can populate all these fields from Bezat benefits, then you can set up your model to work, specifically for the sheets and calculators that are related to employee expense. After we populate all these fields, we can jump to the next section, which is if we have a list of employees here, then we have certain employees that we want to set up termination date maybe in the future for them, or based on like management decision, certain employees need to leave the company, then we can populate the termination date, and we can populate the in-service payment date, and we have to fill all these fields in order for the model to work. So we have to select yes, then enter a termination date. That's definitely after the hire date. There are some controls over the sheet, so it does not allow to enter a date before the hire date, so you don't have to worry about this. So this is on termination. Salary reduction. So for example, if we're rolling salary reduction across the company, either equal salary reduction or it's different from one employee to another, we can actually enter all of this here. So definitely, if this is no, it won't work. So we have to always make sure that this is yes, and the amount is entered accurately here. And then we have the start date. Typically, this should be the beginning of a month, but you can enter like a date that's in the middle of the month. The model will still capture it. Then we can identify the duration for the salary reduction from 1 to 12 months. Then we have indefinite if we don't know for how long it's going to be there. We also have a section for unpaid leaves, so we can enter the number of calendar dates that the employee will be on an unpaid leave and the start date. And once we enter these, they will be captured by the model and reduced from the salary expense and payroll payable. And there is also forced paid leaves. So if we are putting some employees on forced paid leaves, we can do the same. We can we can fill the number of days, calendar days that the employee will go on the leave, and then we can put the start date for the model. So we have populated, so just for the sake of saving time, we have populated some records here, and we'll see how that's reflecting on other sheets. So we'll start with the salary calculator. So with the salary calculator, we have put the first employee on to be terminated in September, and the model has captured that we have actually terminated this employee, so the salary expense has been adjusted accordingly. There is one employee that got a salary reduction in September as well. The model has captured the salary reduction in September, and there's another employee who got a salary reduction in October, and this has been captured as well by the model. And now this is in terms of expense, definitely like based on your company settings here, you can actually like fill when you how frequently your payroll is processed and when it's usually paid. So based on this criteria, the model will capture this criteria and will generate the salary payable or the salary payment schedule. So it depends. And if an employee is leaving, their salaries will be deferred to the end of service payment instead of being captured in this sheet. If you have any questions, you can actually type them in the chat, and we'll discuss them later in the Q&A session as after I finish the walkthrough. Grad Security is the same. I mean, it's calculated based on the basic salaries, and it's based on the UE labor law, and it's captured here for every single employee. So, for example, the employee who got terminated in September, you can see that this is the last payment that we need to pay for the employee, and it's thereafter, there is no calculation for gratuity, and this will be captured in the model in the end of service payment. We'll jump to unpaid leaves calculator. So we have put, if we go back to this sheet, we have one employee on unpaid leaves. So we have this employee with full data filled. So we have on May 20 days, and we have filled all these fields. If we go to unpaid leaves, we'll see that this is reflected in May. So we know this is the reduction from salaries for unpaid leaves. And here we have, if we go back to employees list, we'll see that we have one employee whose the visa renewal date is coming up in this year in 2020. So also this is captured by the model in the residency visa cost here. Finally, this is not actually the last one. It's there's also paid leaves calculator for employees, but this is another one. So we have also in the employees sheet, we have the premium per employee that we're paying per employee. So based on that premium and based on the payment terms that we have with the insurance company, this cost is split. As you see, the employee who left us in September actually does not have further premium to be paid. So that's reflected in our cost as well. For paid leaves calculator, whatever is filled in paid leaves is also reflected here directly. So the provision is decreased by the number of days taken. And finally, for loans calculator, we have two sections. The first section is for fixed loans like auto loan, mortgage, term loan, leases. And we can populate the specifics of each loan. The monthly payment is calculated automatically. Once we fill up all these fields, then the amortization loan value is generated automatically. Then we have the monthly interest expense and the monthly repayments too of the loan. So one section that's very important here is this section, which touches on skipping some payments. If the bank allows us or gives us some relief to skip some payments of our loans, then we can just put yes, and we can select the month when this will start. And finally, we can put the period for how many months, and this will be skipped from our cash outflow. So these months will be actually taken out when we're calculating our cash flow. The same goes for credit cards and overdraft facilities. So these are different a little bit because also overdraft and credit cards can be used over time. So whenever there's an expense added in the operational expenses, you can actually select the payment method. And if you select overdraft facility or a credit card, that will affect the balance over there. So it also gives you the ability while you're forecasting your cash flow to understand how much you can depend on your credit card or your overdraft facility to meet your obligations of your payables, and how much you can save in cash or improve your cash flow by using them. So I'll stop for now and try to take a look at the questions. I think I've talked for so long.
Amazing. Thank you so much, Baha. We've got a question here. One second. What exactly, sorry, I'm just opening it. What exactly do you need to fill in so the sheet will show everything? You showed employee list and there are questions and settings. Do we need to fill in something else?
Yes, so that's that's something I might skip. I should have talked about. So I will explain how this starts. So first of all, we have 5 sections, I believe, which need to be filled before we start using the model, other than the employee list. So the first one is questions about when the payroll is processed, when they're paid, maximum paid leave days that can be carried forward, the inception month of the insurance policy, month when the accrual paid leaves start, and working days. So you can select Sunday to Thursday or Monday to Friday. And there are some questions about the revenue. So if the business actually, what does the business actually sell? Because this affects the, and if the business amortizes the revenue across the contract service period. If yes, then the revenue will be amortized. If no, it will be showed as the invoice, as the full invoice at the time of the invoice issuance. And this is about historical bad debt expense. We have also VAT payment frequency and the next payment for VAT. One thing, so when we started the model, we put our forecasting start month here as April 2020. So we want to start from April. If we want to start from April, we want to make sure that the balance sheet of March 31st, 2020 is added. So we need to populate all the financial statement accounts, the balance sheet accounts. So we'll start with cash, current assets, and then we'll jump to non-current assets. So I believe it's different from business to business. That's why we try to keep other current assets and other current liabilities based on if your business has other accounts that we did not address in the balance sheet. So, but most of the common accounts are actually taken into consideration in this balance sheet. And there are a few checks when you're filling up this initial balance sheet. So these checks, there are some schedules that need to be filled. So for example, if we're putting a balance of 20,000 in accounts receivable, then we have to go to Schedule 1 and make sure that in Schedule 1, the total is coming up to 20,000 for the model to work. For prepaid expenses, if we have opening balance of prepaid expense of 5,000, we also have to make sure that we have the amortization schedule for this. So I put an example of 5,000 and I selected rent out of all our accounts and I spread this over 10 months. So you can see how now what if this is like, for example, 6,000, then you will have the X sign here or icon that tells you that this is wrong, so you have to double check. And this goes for all the accounts, and once you fill the balance sheet, you'll have the final check to make sure that assets equals liabilities and shareholders' equity. Now, all of these schedules are related to the balance sheet as well, so I guess most of them are straightforward. If you have any questions, let me know as I'm scrolling down.
Okay, so we've got a question here. Is this financial planner included in the Bayzat HR platform?
So we wish, actually, we built it on Excel, so it's not included in the platform at the moment. But that's why we have Arijit with us, because Arijit, he's the product manager and he's the person who can understand the needs for such tools to be included in our platform. So this is, yeah. So for now, it's not, it's only an Excel tool at the moment. It's built entirely in Excel.
I'll just add quickly something. So the intent is to be helpful, it being helpful for you. And as we receive feedback from you, it is definitely in the pipelines to be added on the product. So we cannot stress more to just share your feedback as much as you know, what you like about the Excel and what you don't like, so that we can, make a very comprehensive product on the HR platform for you. So we'll really appreciate your feedback, whatever it is.
Great, thank you so much. And then is this sheet effective for managing single company account, or can you use it to manage multiple companies?
So it's designed for SMEs that most of the time have one single entity, but if you have a consolidated financials, then it's okay, because it all depends on how you populate the balance sheet accounts. If you consolidate several entities together, then you have one consolidated financial statements. You can actually use it for several entities, but you want to know the breakdown of the details across different entities. By this, I mean how much cash was generated from a single entity to the entire group. So it's currently more working the best with a single entity organization.
Okay, and then we have a question: who can help with filling in the sheet, because there is a lot of information that needs to be added in?
Yeah, so I think that's a good question. So the employee list, most of the data are on Bayzat benefits, if you're a user of Bayzat benefits. If you don't use Bayzat benefits, first, we recommend you to start using it. Second, maybe your HR can actually take care of this, because the HR department will have all this data about, can populate all this data. Then next, on revenue, I think your sales team can populate the revenue fields. Operational expenses can be filled by your payables team or accountant. And these are the main three ones that need to be filled. Everything else is automatically generated. Loans calculator, I think it can be filled by the senior manager or by a senior person who understands the contracts with the banks. I mean, it's as I said in my presentation, it's very granular, and it's very granular. We built it this way because we understand that cash flow forecasts are more accurate when it's built this way out of our experience. There are a couple of things I think I should also cover in about the model. So in the revenue and operational expenses sheet, we have different columns here that need to be filled. So one thing that could be handy to your business is actually the renewal probability for each contract. Let's say we have a contract that's expiring in October 2020, and then we have 50% confidence that the customer will renew with us. Then we will just put 50%, and our revenue will reflect that. So in November, we'll see that the amount will go down to 1,500. So the final revenue that we will show on our income statement and an income statement will be probability based, and this will reflect. You can build basically scenarios about your revenue based on this. So if you have 10 contracts, 20 contracts with your customers, you can identify the expiry month of these contracts, and you can set up a renewal probability based on your current knowledge, and this will reflect on your future cash flow. And one thing is also worth mentioning that definitely you can select different billing cycles and different payment terms that will reflect on your cash flow collections from customers. And for example, if our customers are reaching out to us and asking for payment term extension, we can always, if we have the model in place, just change this field and see how that affects our business. So if we're rolling out a policy to extend all our customers on net 30 to net 60, we can go on this sheet and select this field and change it from net 30 to net 60 for all these customers, and on the spot assess what can happen to our cash flow if we implement this policy. If you want to amortize revenue, you always have to put the number of months you want to amortize the revenue over. So you can select up to 1 year. And you always, if this is like a certain invoice for certain customer, you can select the number of a product that is included in this invoice. And based on whatever you filled in the settings here, you can put the margins, and the cost of goods sold and cost of sales for that revenue will be automatically calculated as well. The revenue sheet will take care of that. You can also have either like number of orders and amount per unit for your calculation, or a fixed amount. So the revenue calculator takes into consideration both these three fields in calculating the final amount. If there is an outstanding balance on the customer, and we know like the customer will pay on a certain month, we can also add it while we're adding their contracts. So it's one-stop shop for managing all our receivables, revenue transactions, and our revenue forecast. For operational expenses, it's pretty much the same. So we have to put if this is a contracted vendor or non-contracted. If it's a contracted vendor, we can put the contract expiry month and if it's going to be renewed or not after this date. We can select the cost classification and the expense type of this vendor. So we can put one of these income statement expense accounts. We can identify the month, the billing cycle, and the payment term. So for example, if we are negotiating with vendors and our vendors are providing us with payment extension, we can just take the initial payment term and change it into net 60, and that will reflect in the model. So we know after like all these extensions and reliefs from our vendors, how much in our cash has improved after these measures, because this will also determine what we requested from our vendors. If we still cannot, like after we change this to net 60, we think like our cash is still suffering, then we have to ask for net 90. So it allows us to test our assumptions and have data-driven kind of decision making. As I mentioned before, also in column I, you can change the payment method from bank account to overdraft facility and credit card, and that will change, that will reflect on the loan calculator as well. You can definitely amortize also the expense over a number of months. So this is for prepayments, prepaid expenses. And we have pretty much the same fields that we used also for revenue. You can either have a fixed amount for the invoice, and you can also enter credit note, which is a negative amount. And you can have an amount per unit. And you can depend if we have this vendor that bill us based on the number of orders that we initiate each month to our customers, and the amount per unit is 300, then this will be picked up from the revenue sheet and the calculation will happen on the spot. So you don't have to fill up the number of orders for each one, because the number of orders will be selected. And we can also select number of employees in some cases when the expense is driven by the number of employees. And finally, yes, we have the outstanding balance to this vendor and the estimated payment date. So this will generate our monthly expense, it will generate our monthly payments, and will generate the amortized expenses as well, and the VAT. Finally, after we have all of this in place, we have taken the time, I think, in my opinion, it's worth doing this exercise, like setting up a task force within your company and having them to populate these fields just once. It might take a day or two to finish this, but then you will have clear visibility into your financial position. And what happens next is, after all of these failed accurately and properly, you will have a pro forma financial statement, so a pro forma income statement that will show you your profit or loss, your revenue, your expenses across different months. So it goes up to 21 months. So we started in April and it finishes in December 2021, which is a good period, I mean, for short-term planning if we're focusing on cash flow management. And this will also populate this section, which is the balance sheet, and you will know the cash balance at the end of each month based on all of the assumptions you entered into the different sheets. You can track your cash flow changes here. You can also take a look at current assets, current liabilities to analyze your working capital. And finally, just make sure that all of these icons are green, which means that your balance sheet is balanced. Well, the model is designed already to balance the balance sheet if everything is entered correctly. And in case something is missing, then the balance sheet might not be balanced. So the best way to avoid unbalanced balance sheet is to make sure that everything is entered accurately and correctly. The third statement we have is the statement of cash flow, which is a reconciliation between net income and ending cash balance based on the movement of our accounts. And we have the reconciliation of each single account we have in our balance sheet here. So it shows how the account has been changed from the opening balance until the ending balance based on what has happened. So for all accounts we have added, whenever you see this purple color, it means for these fields can be input manually. So for example, like there are some less common accounts like short-term investments that we do not necessarily have to have a separate sheet for like populating it. You can add the additions, you can add the retirements and gains or losses in certain month manually, and that will reflect on the balance sheet directly. So, so if you have any movement in these accounts, you can just go down here and populate these numbers manually to have everything done. but the heavy work around accounts payable and accounts receivable is done through the revenue and the operational expenses sheets. So this is a general overview. I think, I hope I did not miss anything. I don't think I did at this point, but if you have any questions, I'm happy to answer them as well.
Yeah, if you've got any more questions, please put them in the chat or in the Q&A section so that we can cover it. If any of you did not receive the file, then please drop me an email, melena@bayzat.com. And all of our webinars are available on the Bayzat YouTube channel. So do go and have a look. As Baha and Arijit said, we did a, business continuity plan. So if you need some help, it was very, very useful. I think there's no more questions left. We're almost out of time. So thank you so much, Baha and Arijit, for putting this together. We hope that you found it useful, and we look forward to welcoming you at our next session soon. Okay? Thank you so much.
Thank you. And I hope it's useful to everyone. Yeah. Have a good day.
Okay. Take care. Bye.
Bye.